Welcome to the team call, everybody. It's Monday. It's time to get that week started, bring up that amazing energy to have an incredible week ahead of us. I hope everybody got some rest. We are going to be doing an amazing mortgage protection training today. If you have been in one of the mortgage protection trainings, you probably knows a lot of what we're going to be doing today. However, what I wanted to do is I wanted to touch on a few very specific things that was always my superpower. It's the superpower of a lot of our, the agents that have been doing mortgage protection have learned some of the things that I specifically always did when I was in the field that made me have, a 92% persistency rate over 12 months. I'm not talking about 6 months. My persistency rate to this day is over 90% over 12 months. And then there's a few other things that I want people to really get to help you take your mortgage protection game to the next level. And again, we're all about good quality of business, because if you have good quality of business, you don't have to work as hard, right? If you're keeping 90% of that business on the books over 12 months, I mean, you are doing what 98% of the people in the business are not doing. So you're going to make your life easier, and you're going to have a much better income, cash flow, and overall happiness, because you are optimizing time as well as your leads. Previous company. So my point is, instead of writing IULEs with Mutual Omaha, you should be writing smart ULs with Foresters. We are also right now contracting Ameritas. A lot of people have already received their contracts, and we're also contracting an exclusive instant IUL with Core Bridge that does not have any issues with contracting. Everybody's going to have access to the Core Bridge IUL. In the meantime, everybody can utilize smart ULs with Foresters. Now, let me tell you guys something about Foresters, okay? Yeah. Foresters is not going to decline you when you put an application immediately if something doesn't sound right on your application, like an IULE or an America would. The thing about Foresters is that if they find something on the MIB that is not like matching with what's on the application, they will send an email asking for clarification. It is very important. If you want to issue your business, it is extremely important that you are going ahead and answering those emails with the information that they request. Now, if you want to minimize those really annoying emails that comes afterwards, what you need to do is that when you're writing a Forester's application, there's a note section. Okay, you want to make sure that you are asking all the questions on the application. You are putting every information in there. Let's say that they do have diabetes. You're going to click yes on diabetes, and you're going to answer the diabetes questionnaire. Let's say that they do have some type of mental health issues. You're going to click yes on the mental health questions, and you're going to answer the mental health questionnaire. And the cool thing is that many people that you would not be able to get approved with other carriers because they're instant and they just like it's an auto process. If you do answer the questions and you do provide the information, you might be able to get them approved, because you answer it correctly. So the thing about Foresters is that it's a phenomenal carrier, but they do ask extra questions, and you might be able to get a lot other people that you wouldn't be able to get with other carriers approved. So make sure that you are checking those emails from Foresters. You can also go into your Foresters dashboard to check the status on every application that you have written and see what the required, the pending requirements are. So you can go click and submit whatever they're asking in there and get your policies issued. I did talk with Tony from Foresters a few days ago, and he told me that we have hundreds of applications with pending requirements there. If you're writing applications and you are not submitting the pending requirements, you're not going to issue, your client is not protected, you're not getting paid. So it's very important that you guys are following up on that business. So
Vivian, I wanted to say also, it's a really good idea to call them if you have any questions about an illustration that you're building in lieu of an IULE. You can do an IUL, like you said. They're very, very helpful. I had a lady that I called in Foresters that took a good 20 minutes of her time to really help me tweak that application or that illustration for a client that I had some concerns on. So I spoke with her, and then I spoke with risk assessment, and they're really, really, really good. Very good customer service, and they help me build a very good illustration for a client. So don't be shy about calling them because they're very, very knowledgeable.
No, they are, and the product is phenomenal. Thank you, Alex. All right, guys. So let's get this training started. A few things I do. A little bit of background on me, if you have, if you don't know, I always, when I was in the field full time, every single one of my months were over $100,000. I was a consistent $100,000, $120,000 a month a producer, 100% doing mortgage protection. I truly believe that mortgage protection is the best way for you to get to a point where you have great quality of business, great persistency, and also a great book of business where you can sell many other things, right? If you were doing advanced market sales, mortgage protection leads are phenomenal leads for you to find those cases. Now, mortgage protection, when we had Aria separate, I always started people on mortgage protection. I don't think that's the easiest way to start people. I think that, there's people that start them on life insurance and then they will slowly transition people. It is a little bit of a longer learning curve when you're starting out. So my recommendation, yes, is to, do learn, how to sell insurance, whatever leads you are utilizing. And then I would say the natural progression is going to be to get to mortgage protection. I always did mortgage protection when I started in the industry. I started with an IMO. They did not do anything but mortgage protection. So I learned in mortgage protection, and that's what I always did with all of our agents. Now, it is a little bit of a learning curve. So you do not change your processes because you are listening to this. It is a wonderful tool to have when you understand the industry, you know how to sell, and then you get to that point, right? So why mortgage protection? Why did a lot of people would come to me and say, "Hey, Viv, I want to do IWOWs, or I want to do this, or I want to do that," and I would be like, "The most profitable, the best cash flow you're gonna have is gonna be with mortgage protection." Why? First, the demographics, the people that you're sitting with, usually they just purchase a home, whether it was $100,000 home or $1 million home. They have the income to qualify for a loan. What that means is that they are more financially sound than a final expense lead, or whatever other leads that you might be working with. So you're most likely going to be sitting with people that can afford the insurance that you have to offer them. The second thing is, I have never sat down with somebody, and if you're doing mortgage protection and you are postponing your payments on those policies, is because you just don't have the tools or don't know how to set up that application, that presentation where you do not need to postpone your payments for your policies. I have never actually, in probably thousands of seats, hundreds of applications that I have done in my lifetime, I have one situation ever that I actually had to postpone a policy, and that policy never actually came to exist because it got canceled before it actually went into effect. So I do not have to postpone ever. I don't even give an option to postpone a draft on an application, and I will explain to you guys why in a second. And a lot of the agents that I have taught personally have never had to postpone policies either, because those people, they again are a little bit more financially sound, and if you do a proper job when you're selling that policy, they can't afford to pay for it that day. The third thing that I'm going to talk about here is cash flow. We have a system where we do buy leads. And if you buy leads, you do need to make sure that if you're sitting down and you're selling a policy, you get paid right away and you get paid what you were writing. So I love IUL leads. I love writing IULs. The only problem with IULs is that a lot of times you're writing this $15,000 cases, $20,000 cases, $25,000 cases, and you only get paid up to the cap. The cap could be 2,000, it could be 2,500, and it could be $3,500. If it's which is fine, which is great. It's a great cherry on top. The problem is that sometimes you might be issuing $100,000 on IUL leads, which is great, but you really only made for cash flow $10,000 or $15,000, which is, depending on how much money you're spending in leads, it can be an issue because your cash flow is not there. Now, a year down the road, when you get those back end commissions, you're going to be fine. But when you're starting out in the business and you don't have that many back end commissions, it can hurt your cash flow. You also, with IULs, you need to understand that you're only getting paid on target premium. And if you are a good insurance agent, you are not writing IULs where you're just like, maxing out insurance and doing very little, cash building on the policy. So you're really only getting paid on the insurance portion of your policy. And sometimes you might be writing a $15,000 IUL and you're only getting paid on 3 or 4, depending on how you build that IUL. So all of those are great. The thing about mortgage protection, the average you're going to be writing is going to be um, you know, $1,200 a person. So if you're sitting with a couple, it's $2,500. Now you're gonna have bigger cases. But if you're writing a $1,200 policy on the husband, a $1,200 policy on the wife, it took you 45 minutes. You're actually getting paid on that premium. And if you have enough appointments throughout the day, you can make an incredible amount of cash flow, good quality business that it will take your profitability to the next level. So let's talk about how I roll, over $100,000 a month in mortgage protection, and I was consistent with it. The first thing is going to be your leads. You do need to make sure that you have good quantity of leads. The second thing is going to be your activity. You do need to make sure that you are booking enough appointments. Now, in my case, I always did Zoom appointments. A lot of our agents do Zoom, and a lot of our agents do telesales. It doesn't matter what you do as long as you have enough activity. I always told everybody, if you're doing telesales, you need more activity than Zoom. It's just a different type of system. But I always, when I'm doing Zoom appointments, I was always going for at least 10, but around 15 appointments a day to be able to have that activity where I was writing 100 grand a month. Okay. Now, what is my presentation to be able to make sure I have the best quality of business and to be able to make sure that I have high persistency and that I have an extremely high closing ratio? We're going to go through my presentation. A few things that I want you guys to write down. If you have a pen, please do make sure that you are writing down. Let me get my actual script real quick. And we are putting together an actual boot camp right now. In the next few weeks, it will be up. It's going to be an insurance boot camp. It's going to be a mortgage protection boot camp. So we're going to have all in there. And all of that is going to be on the boot camp for you guys to download. Let me get the script. Hold on, guys. Because I'm going to share my screen. Let's see if I have it here. I would just I'm just going to say the steps and I'm going to have you guys write it down. So it's very important that you understand that the presentation, if you go on Zoom and you watch Austin Harless presenting, if you watch Jeff Kamara presenting, if you watch Ricardo Hernandez presenting, if you watch Kaylee Hamilton presenting, or any of the people the people that used to be my direct agents, it's a copy and paste of my presentation. It became second nature to them. It can become second nature to you as well. I have a presentation, a script for everybody if you would like to utilize that on the boot camp as soon as we launch. So the biggest thing that you need to understand is that you need to understand that you have to have the right structure for each presentation. Okay. The first thing that you're going to do when you get in the call, write this down, is going to be establish credibility. So credibility is number one. The second thing that you're going to be doing is going to be your role and purpose. And what does that mean? It means you're going to be telling everybody exactly what you're going to be doing in the next 45 minutes. If you take somebody and you put them on a car and you don't tell them where you're taking them, what is that? That's kidnapping. And nobody likes to be kidnapped, right? So we're not kidnapping our clients. And the way that we're not going to kidnap our clients is that we're going to do a role and purpose. Now, my role and purpose is a little bit longer. Rachel's role and purpose is a little bit shorter. Everybody has their best way to do it. On my script, you can have my way. You can take mine and you can adapt to what's comfortable for you. But you do need to make sure that you are hitting all of these points. This third thing that you're going to be doing is going to be a surface why. What does that mean? A surface why is going to be when you're going to be asking them why this is important to them. God forbid something happened and they didn't come home last night. How would that turn out for them? Right? um, you're going to let them explain to you why they need mortgage protection. And you need to make sure that that answer and that why satisfies you. If I get to the surface why and I hear, oh, I don't know, I'm just calling because I got a million letters, then I have to dig into that why to get the actual why out. If there's no why, I'm done. I'm not running that presentation. I'm not wasting my time. I know some people have a different view of that, but that's the reason I have a 92% persistency rate. I do not waste my time with people that do not want to get what I have to sell them, because I can only help people that want to be helped. So, and if there's no why, okay, Carrie, God forbid something happened and then come home last night. How is your son going to pay for your mortgage? And then if you're telling me, oh, he's going to figure out, okay, so is he going to have the money to pay for it? Oh, I don't know, but I don't care. Okay. So, uh, why are you looking into mortgage protection? Oh, I don't know. I got a bunch of letters. Okay, so let me just understand here, Carrie. You're telling me that your son does not have a way to pay for the mortgage. You just called because you got letters. You have a mortgage that costs $400,000 a month, and you don't care if it goes to the bank. And they're like, "Yeah, I don't care." Okay, Carrie, I can help you. Sorry. Do you know why I can't help you? Because I'm an underwriter. I'm not a salesperson. I'm not trying to convince you to get something just so you cancel it and then I get a charge back afterwards. That is the way I do things. I do not try and convince people that they need something that they don't need or don't care for. The majority of the people will not give you that, though. Sometimes they will give you an objection, and you just have to learn how to break it apart so they can think and understand that's important to them, and that's okay. But if it's not important, I don't even go next. My next thing is I will go into the financial inventory and I will verify their information, gather the information, and underwrite their file. And that is basically what you're gonna utilize the for that's going to help you tremendously. And I'm going to show you how, because I'm going to actually do a full presentation with somebody here and you're going to watch how that is going to help me in that process. The next thing that I'm going to be doing is a financial fire drill. A financial fire drill basically is when I get all of their finances and their financial situation, and I'm going to make them see how life is going to look like if they don't have mortgage protection. And what I'm going to do is I'm going to utilize it, and I'm going to share my screen. You can either do that with, I know that you guys that do telesales can just take a link and send to the clients that they can just visualize your screen. Or if you're doing a Zoom, you can share that screen with them. And the next thing I'm going to do after the financial fire drill, I will make them tell me that they need this. And they need to be very convinced they do. And then the next thing is I'm going to address the think about it. This is extremely, extremely important. You're going to address the think about it, because if you don't address it, they're going to give you the think about it because they're just not sure what to tell you. You're going to address the think about it. Once I address the think about it, I'm going to show them options. They're going to pick the options. I'm going to start the application. And the last thing and most important thing, guys, that I'm going to be doing is I am going to lock it down. Like my life depends on it. We live in a world where people buy leads. We live in a world where people receive 75 letters at the same time with the same wording. They think it's going to be the same thing, but uh it's not the same thing. It's different people, different lead compass, and the whole thing. But if you lock down your sale, when they receive those letters, they will throw it out. When they get the calls, they will call you and tell you, hey, there's something going on. Somebody's telling me they're your manager. When they call, somebody calls them and say, hey, Vivian left the company and I need to rewrite your application. What's going to happen is, did you find it for me? Oh, Letha, you're the best. Oh, you found it. I love you. So she found it. Okay. I'm gonna share my screen so you guys can see it. Okay, so this is all I'm talking about here. Okay. Secure the sale. That's that lock-in. When somebody calls and say, hey, Vivian left the company, I need to rewrite your application. They're gonna tell you, screw you. I'm gonna call Vivian because Vivian did a good job securing the sale. So just to go back, you got to first thing, you're securing, you're creating credibility. You're going to share your insurance license, your driver's license. You're going to build credibility. The second step is you're going to explain your role and purpose. The third step is you're going to do the surface why. You're going to dig into their why and why they are thinking about, mortgage protection and how important that is. You're going to make them sell you why that's important to them. The fourth step, you're going to verify information and fill out the financial inventory. The fifth step is the why, my why. That's when you resurrect the emotion. And I'm going to explain to you guys how to do that. The sixth step is the financial fire drill. Actually create the fire drill for you so you don't have to do it yourself. You're just going to go over it with your client. And then you're going to address the think about. That's the seventh step. Then, step 8, you're going to, well, that's actually change with. So you're going to put this information over here on step after the why. You're going to put the information in Slack and find out what they qualify. Then you're going to do the financial fire drill. You're going to address the think about it. Then you're going to give the options. And then step 10 is secure the sale. Let me be very clear, guys. If you're doing mortgage protection and you are not utilizing all of these steps, you are leaving money on the table. We're talking about a 20 to 30% persistency that you can go up by just making sure that you're following this structure. Okay. So let me stop sharing real quick. And then I'm going to explain every step and how we do it. The first thing is I am going to get either on Zoom or on a telesales, on a phone call. If I'm doing a phone call, the first thing that I do, I let them know. I say, Carrie, do you want to role play with me?
Yes, but I have an appointment in 10 minutes.
Oh, okay. So no role play from you. Okay, so I need to find somebody that's available to role play with me.
I'll
Feliz, do you
do
want
it.
to play? Oh, Jesus, you got it, buddy.
There we go.
You and I. Okay.
Bye.
So you're gonna role play with me, Jesus. You are my client. Maria, you're gonna be Jesus's wife.
All right.
Okay. So we have Jesus and we have Maria, and we are going to be getting into this call. And um, okay, so our hub is back up, so we're gonna be able to go there after the training. Okay, so Jesus and Maria, and here's the thing: I'm gonna do the training, guys, and I'm going to go in to do snippets of role playing. Okay, so I'm gonna explain each section of it and how important it is and why this is important. The first thing is let's talk about sharing your insurance license and in my case, I share my driver's license as well. Just want to make sure that they do understand who I am. I am on Zoom. They're seeing my face, right? If I'm doing a telesale, the first thing I'm going to get in the car and I'm going to say is this: Jesus, just so you know, this call is being recorded for quality and training purposes. I don't know if you guys are training, are actually recording your calls, but if I am doing a telesales, I always record my calls. The reason I record my calls is that I'm not going to take a chance that somebody's going to say that I did something that I didn't do, that I don't have proof about it. Also, the second thing is I took this from one time I was doing an appointment. I was in home with a client, and this woman got a spam call. It was a spam call of somebody calling her and trying to sell her something. But before they started the call, I was on an appointment with her. She answered on speaker, and it was clearly a spam call. But because the person says, "Hey, just so you know, this is being recorded for quality and training purposes," now this woman's like, "Oh, I need to listen to this." That is the one hack that will get your client to be like, oh, this is serious. It's being recorded for quality and training purposes. But you should be recording all of your calls. Okay.
Okay.
I can tell you many stories from many agents, from many situations where people will do the right thing, but the client is upset 6 months later that they are paying for that policy. They will call the company and will say, hey, this person wrote an application, didn't sign for everything, for anything. And you know what? The only way they could save themselves is by going in there and say, no, here's a recording of my call. And I did do things right. So always record your calls to protect yourself and your license, your biggest and most the best asset you have is your license. You lose your license, you cannot make any income. So do record your calls. Okay. So that's the thing. I will tell Jesus, Maria, just so you guys know, I am recording this call for quality and training purposes. And if I'm on my phone, I even go and I'll do it. Dun, 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 dun. I actually utilize Agent AI to do telesales. So my calls are recorded. And when I call, it says this call is being recorded. So it is actually being recorded. So after that, I will let them know. Just so you know, I'm sending you a text message right now with a copy of my license. Please do let me know if you received this. In my case, when I do Zoom, I will be Jesus, Maria. Just so you know, I do need to share my license with you. Funny story. My dad wanted me to be a doctor, and I ended up becoming a medical underwriter. You know, he's not very happy about that, but I do have a license to show for it. And here it is, my license. And they usually, you know, they start laughing because it's funny that I'm no doctor. I'm an underwriter, a beaten up underwriter in some office somewhere. And now I'm showing them the license. And that breaks the ice to start the conversation. If people laugh with you, they will buy from you. So you show them the licenses. So let me do this. Can I spotlight? I don't know if I can. Okay, I'm gonna spotlight you guys. Jesus, said something.
Hi.
Say it again, because I lost you.
Hi, how are you?
Okay, Jesus, where does Jesus go? Say something again, Jesus. Okay,
Good
okay.
afternoon. Good morning.
Okay. So we're gonna do a Zoom appointment, and I'm going to show you guys how we do this. Okay. So okay. So okay, now I can see you guys. All right, Jesus, Maria, how are you? I'm Vivian. It's great meeting you.
Good morning, Vivian.
Good morning.
Good morning.
I'm the medical underwriter that was assigned to help you guys out. We're gonna be doing a few things today. To get started, I do need to do a few things. The first thing is I need to let you know this call is being recorded for quality and training purpose. Okay.
All right.
Okay.
Awesome. The next thing is you guys are located in Wyoming. Is that correct?
Correct.
Okay,
Yes.
awesome. I am going to be sharing my screen with you, and here is my license. Funny story, Maria. My dad wanted me to become a doctor, and I ended up becoming a medical underwriter. He's not very happy about that, but I do have a license to show for it. So go ahead and take a print screen. Let me know when you got it. It's very important. I am handling your private information. I do need to make sure that you have mine as well.
Yes.
You got it? Okay, awesome.
Yes.
So you have my license, and I need to stop sharing. Okay, awesome. Very quick, I'm going to tell you guys real quick what it is that I'm going to do here. And if you have any questions, do ask me, okay?
Okay.
Okay.
All right. Basically, I am what they call a medical field underwriter. What that means, Jesus, is that for the insurance carriers, it's my job to verify I am that you are alive, you're breathing, you're not attached to a 500-pound oxygen tank, and that's why I have to do this on Zoom. And I see that you're not, so that's good news. It makes my job a lot easier. Once I do that, it flips. I become the person that gets to work for you guys. So super simple. My job and my goal is always to find you guys the best coverage you're gonna qualify for the least amount of money. And for me to do that, I'm gonna have to ask you guys a few questions. I'm gonna have to go through some health questions, so I know what you can possibly qualify for. Mortgage protection is not something that you can just go and apply and get like car insurance. You actually do have to qualify, and it is based on your health and habits. So I'll go through some a few health questions, and then I will go through some financial questions to find out if you even need this. And I mean that, Maria, because I'll be very honest with you. I do see people on a regular basis that don't need mortgage protection. And if they don't need mortgage protection, I'll let you know. I do have another 15 families to see today. They do think I'm superwoman or something. So I'll be going next to my next family. And, if you do need mortgage protection, what I'm going to do is we're going to pull a few options and we're going to look at them together. Now, Maria and Jesus, I don't know your budget. I don't know your life. You're actually going to be the person that's picking the option that makes sense for you guys. And once you do, all I can do for you is help you fill out an application today. I'm not the insurance carrier. I do not make any decisions. I'm just the lady with the paperwork. They do say I'm pretty good at my job. So I will do my best to underwrite your file and make sure that we're putting all the information in there so we don't have any declines or we don't have any issues getting the application through. As long as you're honest with me, everything should be fine. But I do not make that final decision. The in-home underwriters do. Once they approve your application, if they approve it, they will issue your policy. They will send the policy out to you. And then once you receive that policy, Jesus, you give me a call. I'll hop on Zoom with you guys and we can review everything together. If you want to make any changes at that point, once we have an approval, then I can help you make those changes. Does that sound good?
Sounds
Great.
good.
All right, guys, what I just did here is first, I did not kidnap my clients. Second, I told them exactly what's going to be happening because write this down and put it on your screen when you are running appointments. The best way to avoid objections is not to get them. I could spend all day teaching you how to handle objections, but why are you getting the objections in the first place? The reason you're getting them is because you are not addressing them ahead of time. So I just told them, I'm going to ask for your health. I'm going to ask for your financials. I'm going to find out if you even need this. I'm going to be asking some things and you need to be honest with me, because if you're not honest with me, you're wasting your time and my time because you might be getting a decline. And then I told them that we're going to be doing an application today. And they said, okay. And I told them that if they want to change anything, we're changing that after they are approved, once we have that policy on hand. So the best way to avoid objections is not to get them. Now, let's say that they don't want to do an application today. Maybe Jesus will come to me and will say, hey, I don't know if I can do an application. Go ahead. Jesus, give me the objection.
So I'm not really looking for anything right now. I don't have a budget for it at the moment.
Okay. So you don't have a budget. So let me ask you a question, Jesus. Did you guys just purchase this home?
Yes.
Okay. And I believe that you were looking for mortgage protection. And just so I understand, when you applied for your mortgage, did you have to show that you had an income?
Yes.
Okay. And God forbid something were to happen. God forbid. Okay. We don't want that to happen, but God forbid something were to happen. And you went to the doctor tomorrow and you found out that you have leukemia. And then now, it's serious. You have to go and you have to go into surgery and you going through chemo, you're going through radiation. Now you cannot make an income because you're trying to take care of your health and get back on your feet, and then now you lose that income that you had to prove you had to get that mortgage. How is that going to work out for you to make that mortgage payment?
That'd be a tough spot. I don't really know.
What do you mean by tough spot? Do you mean you would be able to swing it by, or would you lose the house because now you lost the income that you had to have to get the house to begin with?
I think I definitely I would probably have to sell most of my stuff, you know.
Okay, so my thing is, I understand that you are just looking around, and let me just explain to you the difference, and it's okay because I went to insurance school to know this stuff, and you don't. But let me explain to you the difference between just get like a car insurance, or getting a boat insurance, or getting mortgage protection, or even get like house insurance. You can actually shop around for cars and see where you can get the best rate. You can shop around for house insurance and see where you can get the best rate. For mortgage protection, it's not something that you can do. It's something that you need to qualify for. And the thing is, once we know what you qualify for, it's my job to shop around for you. But here's the thing: I'm an actual underwriter. I'm not a quoting machine. So if you understand that mortgage protection is something that's important for you to have, for you and Maria, so God forbid something happens, you guys are not losing your most valuable asset, I can absolutely help you find out if you qualify for. And if you do qualify for it, I can help you do an application, because there's no point of getting quotes and things like that if it's not something that's important to you. So is that something that is important to you, to actually get something and put in place to help your family in case, God forbid, something were to happen? Or it's just not important to you? Because there's no like, I'm not ready to do an application because it's either important or not important to you. Now, I have never not been able to help a family because it wasn't affordable. My job is to find something to you that is going to fit your budget, but it has to be important to you. Is that something that's important to you, or it's just you don't care?
No, definitely. I definitely want to put something in place.
Okay, wonderful. So if we do find out that you do qualify and that it is something that is important to you, we do have to do an application, because that's what I do as an underwriter. Does that make sense?
Yes.
Okay, wonderful. So here's the thing, guys. I will get that objection ahead of time, and I'll let him know I'm in charge. Please write this down. Your posture is everything. Your posture will dictate what kind of success you're going to have in this industry. If you go to a doctor and you get there and you're like, I'm lightheaded and I think I have high blood pressure and I don't feel good, and the doctor says, okay, I'm going to prescribe lisinopril to you, and you say, oh no, I don't want to take lisinopril, and the doctor says, okay, then don't take lisinopril because you don't want to take lisinopril. The client is in control. You are the doctor here. So if you're sitting with somebody and they're telling you how things are going to go, you are never going to succeed in this industry. Quit. You are not going to succeed. Go work at McDonald's. You can take orders at McDonald's. This is not what we do here. We understand that we are doing things to help people, and people need to be helped to think, not to be sold, to think. And they have to tell you how that's important for their family. So you get those objections ahead of time, you smash them, and then you go on, because I never get to an end of a presentation unless I'm like out of my mind and I have lots of time in my hands, and I will never get to the end of the presentation and I'll be like, oh, I don't want this. Or I was screwed up somewhere and I'm showing them stuff they can't afford. Because trust me, I know exactly what they can afford. So best way to avoid objections is not to get them. The next thing that we're going to be doing, guys, is going to be the surface wire, which is what I just did, but I'm going to do it in a different way so you can understand. So remember, we're going to be Roman purpose. They said, yes, I'm good with it. If you got any rejections, you smash them right there. Then the surface why. That is all of that's going to happen in the first 10 minutes of the application. It's going to establish, hey, am I going to waste my time here? Am I going to spend my time here? Am I going to help these people? Surface why. So I'm going to go, Jesus, Maria, talk to me a little bit. Why were you guys looking into mortgage protection? What makes it something that's important to you? Do you even know what mortgage protection is?
Well, I don't know what mortgage protection is. I wanted to get some more information about it. And I want to make sure that we protect our house for our family. God forbid if something happens to me or Jesus.
Okay, so let me explain to you guys what is mortgage protection first. Very important, you need to understand. So mortgage protection, the biggest thing is people think mortgage protection and life insurance is the same thing. It's not. Life insurance pays if you die. Mortgage protection pays if you are alive. But like I said, God forbid something happened and you lose that income that you had to show that you had to be able to buy the house to begin with, right? So that is the biggest difference. The second thing is mortgage protection is a plan that God forbid something were to happen and you were to pass away. The house would be either paid off or it would make the payments for you. If you were to become sick, you have a critical illness, a chronic illness, a terminal illness. Now, you have a massive cancer, a massive heart attack. You're stuck in the hospital for 3 months. That policy would come in and it would take care of your mortgage. So you don't have to lose your most valuable asset. Does that make sense, Maria?
Yes, that makes sense. I love it.
Now, Jesus, talk to me a little bit. God forbid, okay, let me knock on wood again. God forbid something happened and you didn't come home last night. How would that turn out for Maria? But guys, please pay attention to what I'm doing. I am asking the husband. I'm asking the husband if he doesn't come home. And then I'm going to ask Maria, actually. Maria, if Jesus didn't come home last night, how would that turn out for you? You want the husband to hear his wife in pain. This is all tactics. It's psychology. he needs to hear her pain. She needs to hear his pain. So, Maria, if Jesus didn't come home last night, how would that turn out for you and the kids?
Oh my God. That would be devastating. Because I don't think my income will be able to support, the mortgage and all the bills. I wouldn't be able to do it at all.
Okay, so you say it's devastating. Guys, dig into it. That's not enough. You need emotion. Emotion. What do you mean by devastating, Maria? What do you think would happen if he didn't come home last night and now you by yourself, you have only your income, you have the mortgage, you have the bills, you have the kids, you have their activities, you have the expenses that come with it. What would you have to do? Do you think you would be able to keep the house? Do you think that you would be able to get another job? Do you think that you would need that you would have to get another job and you would still what would happen?
To be honest with you, if that happens, I would have to be forced to move to another location, take the kids to a new school, probably move back in with my mom. It's a lot. And I'm not willing to do that. Like my kids are already established in their schools. And we live in a great neighborhood, great upper class neighborhood. And I don't think that I want to move to another neighborhood. I want to raise my children right here. So if we didn't have his income, you know, we could potentially lose the house, right? It's not something I want because
So
I'll fall behind on the mortgage payments.
you say potentially lose the house. As it stands today, with the income that you have and the payments that you have and the lifestyle that you live, would you be able to make that monthly payments by yourself?
Absolutely not.
Do you know
There's
how
no
long
way.
it takes for a bank to start foreclosure on your house?
I think I heard 2 months
3 months.
of missed payments,
3 months.
3 months of missed payments. Okay.
And, and then you said that you would have to go and move with your mom?
Yeah, possibly move in with my mom. That's something I don't want to do because my mom lives in a small 2-bedroom apartment. We've got 3 kids, and that's not something that I would like to do. And then I got to change schools. That's not good. It's not
Now,
fair for the children.
Jesus, how do you feel about that?
I want to leave my if God forbid I would to have something were to happen to me, I want to leave my family with something so that I don't have to worry about any bills.
As you should. You're a good dad, Jesus.
Thank
Now
you.
let's just go around. So if Maria didn't come home last night, Jesus, and you lose her income, and now you have the kids, you have to take care of the household and all of that. How would that work out? How would that work out for you?
It would definitely be something very devastating, but I could afford it.
You could afford it. Okay. All right. So you would be comfortable. Your income would still take care of the mortgage, the expenses, the kids. You would be able to get some childcare in place.
Yes.
Okay, perfect. All right. What I did here, guys, I did not tell them how this important this is to them. I made them tell themselves. Now, you need to understand that sometimes you're going to hear the husband say, "Oh, I will be fine. My wife, if she doesn't come, I'll be fine." And when you get to the financial inventory, it's a completely different story. But I'm not going to tell them that what they tell me doesn't make sense. I'm going to say, "Okay, great. I'm hearing what they're giving me. It's a surface why." And when I get to the financial inventory, I will show them, well, they will show me with the numbers what is actually true. Then I'll go, okay, awesome, guys. I have a very good idea of what we have here. Now we're going to go ahead and we're going to see what it is that you guys qualify for, if you qualify for this, and what do we have in our hands, okay? And then what are we going to do right now, guys? We're going to open the. Now, if you don't have access, please go in Slack, make sure to text Amanda and get this going. And what I'm going to do is I'm going to click new case. Okay, and I'm going to log in. There we go. Here is my, I'm going to click over here on the top, and I'm going to click on, and I'm going to open their case. I'm going to click new case over here, reload, and I'm going to start this information. Okay, so I'm going to put here Jesus and Maria. And then I'm gonna go through the information on the. So Jesus, how much do you guys have on the mortgage?
Left to pay like in total
Yeah, what's your balance?
$300,000.
300,000. 300,000. Okay. And is that a 30-year mortgage or less?
Less.
What is it? 20 years?
20
Okay. And you guys just purchased a home or did you refi?
purchase.
You purchased, okay.
Yeah.
And if you were to sell the house today, how much would that be worth?
Like 33,000, 33, I mean, $330,000. perhaps.
330,000. So basically you have $30,000 of equity. Is that correct?
Yeah.
Okay, awesome. Congratulations. You guys just bought it and you have a little bit of equity. That's amazing. Now, are you guys paying anything extra on the mortgage on a monthly basis to pay it off early?
No.
No. Okay. What is your monthly payments?
My wife is the one that knows about that stuff.
How much is the monthly
Oh,
payment for you?
we pay 2,900.
$2,900. Okay. And if you guys could pay this mortgage earlier, would you like to?
Yeah.
Yeah, absolutely. We'll save a lot on, on interest.
Yeah. Okay. Awesome. Awesome. And that's great because, depending on how we go here, there are some options that we can help you pay off the mortgage earlier. Now, do you guys, so you are yourselves beneficiaries and you guys have the kids as well, right?
Correct.
Yes.
Okay. And as of today, we talked about this a little bit. It would be tough for you guys to handle the mortgage. And we talked about, if something were to happen, she would lose the house. Now here in this section, guys, you usually want to write down everything that you got from that surface why, and I'll explain to you why. If you write this application and then you get a notice 2 days from now or 2 months from now that they cancel this policy, when you call them to save the policy, if you have enough information about their actual why, that's what you're gonna utilize to save your policy. So when I call Maria, I'll be like, "Hey Maria, I got a notice from Legal in General that you guys canceled your policy. What happened?" "Oh, Vivian, it's tough because my fridge just broke. We had to buy a new fridge. I have to get a new roof for the house, and the payment's too high." And I go, "Okay, Maria, that makes total sense. I get it. And I'm totally willing to make sure to work with you guys. So maybe we can adjust that monthly premium and make it something a little bit more affordable." But I do remember that when we talked, you mentioned that God forbid something were to happen to Jesus, you probably would lose the house because you would have no way to pay for that mortgage and you would have to move with your mom and the kids would have to change school. Is that still the case? Is that still a concern? And they shut up. And she's like, "Yeah, it's a concern." And I'm like, "Okay, so Maria, I'll be very honest with you. My dream is to drive a Ferrari, but that doesn't mean I'm not going to drive my Volvo, because I want something more." So it looks like the problem here is that the monthly premium is a little bit too high for you guys. So how about instead of the full mortgage payoff, we lower it to a half mortgage payoff. So that way you guys have something in place rather than having nothing. Instead of $290 a month, it's going to be $140. Would that help you out? And then she's
Oh,
like,
yes.
"Yeah. Oh, yeah. Okay, wonderful." You just go and rewrite the policy and you keep it in the books. But if you don't have all the information possible here on what would happen, you are not able to call and save that policy because you don't remember. When you're dealing with so many clients, you're not going to remember, right? So you want to make sure that you put it in there and then you're going to go save. And then now you're going to get their information. So, um, um, here it's going to be like, are you guys looking to cover two clients? There's a yes and there's a no. If you put no, it's going to be you're only going to fill out the information for the husband. And he did say that they would be fine, right? But I always fill out the information for both. And let me tell you why you want to fill out the information for both. Because when you get to the financial inventory and you find out that the expenses for the house and everything else is a lot greater than what he thinks it is, because again, he said that his wife is the one that knows the numbers. So when you put that together and you find out that they both need information, you need to have both files underwritten and you need to know what both of them qualify for. So you're gonna put here both. So I'm gonna be like, okay, so we have Jesus, Herrera, oh,
Yes.
and then you have Maria Patton. So what is your date of birth, Jesus? Jesus, you still there?
Yes, yes. I'm sorry.
Okay. What's your
Um, June 26, 2002.
June 26, 2002. So I'm sharing my screen and they're seeing what I'm doing here. And what? He's 2002. Okay, he's 22 years old. Maria is a sugar mama. And I'm just
Yep.
gonna put random numbers just for the I'm just gonna put random numbers here just for the sake of it. So you are in Alabama, and then I'll put here female, and you're also 22, Maria. I'm going to put the same June 26th, 2002. And then you were 125, and you were a female, and you also in Alabama. And I'll put here height is 5'4", 5'10", and then you were 5'4". Okay, then I'll go here. Guys, this is something it's very important to make people understand that this is something that you can't just buy. You actually have to qualify. So guys, I'm gonna ask you guys some health questions now. I just need you to understand this, okay? I am not the judge. I am the attorney. Like I said, these insurance carriers, they do not require any blood, any urine. They will give us an approval just by pulling your MIB, but they do know everything. So when I ask you these questions, I need you to make sure that you're being honest with me, that you're telling me everything that you know that's out there. The insurance carriers, when they pull your MIB report, they will know your prescription medications, every time you went to the doctor, every information that's out there on your medical records, they know that. But if I know ahead of time, we're making sure that we're going to a carrier that's most likely to approve you. Okay. So I need you to be honest with me so we can make sure that we're not wasting our times here. Okay. So I'll ask them the questions. They're going to tell me they have no medical conditions. Okay. Or they will tell me that they have whatever medical conditions. You want to make sure. And here's the thing, even if they tell me they don't have any medical conditions, I'll go, okay, that's amazing, guys. You make my life a lot easier. You have you're very healthy. Now, I do want to make sure I go through these questions so I can make sure that I'm not forgetting anything. In the past 10 years, okay, I'm going to go through a list. Please let me know if there's anything there. Have you guys ever had any conditions or any medications for heart attack, stroke, TIA?
No,
No,
Any cancer, neuropathy, high blood pressure, lupus, elevated blood sugar, arthritis, asthma, or COPD?
no,
Any type
just
of
blood sugar.
blood sugar, okay. For you, Jesus. Okay, so did the doctor ever put you in any medications, Jesus?
Yes, insulin.
Insulin. Oh, okay. So you have diabetes.
Yes.
Okay. So do you know what insulin you're taking?
Just I don't know. I take it it's like one of these syringes. I don't know what it's called.
Okay. So you are a type 1 diabetic because you're very young for
Right.
diabetes.
Right.
Okay. Okay. And you're taking insulin. Okay. Sounds good. And do you know the date that you were diagnosed with diabetes?
I was actually born with that.
You're born with diabetes.
Yeah.
Okay. So I'll put here 02 22 2002. Okay. All right. And see, I asked them if you had any conditions. They're like, no, I don't have anything. But then when you go through the medications, stuff pops up and they will tell you, and then you'll be able to put the information here. So let's say, okay. Anything else, any anxiety, depression, kidney disease, congestive heart failure, atrial fibrillation, or liver diseases?
no,
No.
No.
Okay. So Maria is super healthy and we have a little bit of diabetes here. No problem. Now, have you guys have any hospitalizations in the past?
No.
No hospitalizations. Any issues? Any felonies in the past? Any v- violations with driving? Anything like that?
no,
Have you ever been declined to any life insurances in the past?
no,
No.
Are you guys doing any like you flying any planes for fun these days?
no,
Okay.
No.
So I know that everything here is no, they don't have any felonies. Okay, so you have all these any illegal drug use,
no,
No.
and you guys are both U.S. citizens.
yes,
Yes.
Okay, wonderful. So I have an idea of what it is that you guys qualify for health wise. Let's look at your finances real quick. God forbid something were to happen, Maria and Jesus, and you didn't come home last night. What would you have to be able to help pay for that mortgage in the meantime? Do you guys have any 401ks, any IRAs, any stocks, any savings, anything like that?
No,
None of the above.
Okay. And do you guys have a will?
We
not
haven't
yet.
started one yet. Not yet.
You guys should look into it because we're in Florida or whatever state and it's a probate state. But any life insurances you guys currently have that would help out.
Yes,
You do. Okay. How much coverage? Is that a work insurance or private insurance?
it's work insurance.
Okay. Few things I want you guys to get from this. Okay. The first thing is he told me he has work insurance, and I'll go, oh, that's great, Jesus. Work insurance is amazing. Sometimes it's free. Sometimes it costs very little. The only thing I want you to keep in mind is that work insurance is great, but you have to die on the job. And I
Mhm.
don't mean that you have to die doing the job. I mean that you have to be in your company when you die. And you know what? 30 years is a very long time. And if you change companies, you might be losing that insurance. So we usually don't count that, because if you do, and if you change jobs, that might not be for you there for you in 10, 15, 20 years. Does that make sense?
Definitely.
Now I want you to tell me that you have private insurance and you have $3 million of insurance. Go ahead. Do you have any insurance?
Yes,
Not.
I have go ahead.
You got Maria.
Yeah, go
Yeah,
ahead.
I was gonna say, yeah, I have $3 million with State Farm.
Oh, that's wonderful, Maria. Congratulations. And I'll be very honest with you, Maria. The majority of my clients do have life insurance as well. The reason they take a mortgage protection policy as well is because the life insurance is to replace their income. So, God forbid something happens, their loved ones are going to have enough money to cover, what you would be making over a few years. And the mortgage protection will take care of the mortgage. It's meant to pay off the mortgage. Does that make sense?
Yeah, that makes sense.
Yes.
Yeah,
So what you
completely.
just did, you separated the policies. You can't use your life insurance to pay for your mortgage. You can't use your mortgage protection to pay for your life insurance and replace your income. Put them in little boxes. If you put them in little boxes, people are going to be like, oh, okay. The other thing is mortgage protection, Maria, will pay if you die. Life insurance will pay if you are life insurance will pay if you die. Mortgage protection will pay if you are alive, but you can't make that income that you make any longer. Does that make sense? So that's why we usually, the majority, 99% of my clients, they have both. They have the mortgage protection for the house and they have the life insurance for their life. Make sense?
That makes sense.
Yes.
Now, remember, guys, the best way to avoid objections is doing what? Not to get them. So
Not
if
to
you
get
do
them.
get that objection, like, hold on, we talked about this, Maria. The life insurance is to pay if you die, if you're dead, which mortgage protection will pay if you're alive. Also, the life insurance is to replace your income. You can't do two things with one policy. Remember, we talked about this. You removed the
Yes.
objection out of the table. So anyway, talks about the health insurance, the kids. We're gonna put the kids here. Now we have all the information, guys. You're gonna click here, send to underwriting wizard, and what that's gonna do is there's something that's not answered here. Okay, no surgeries. Okay, you're gonna send to underwriting wizard. What that's gonna do? Oh, hold on, let me put no here and all these things. No surgeries. Okay. And that's going to send it to underwriting wizard while the underwriting wizard is actually working to tell you what to write. Okay. You're going to go and you're going to do the financial inventory. Now, let me tell you about, this looks like, okay, the underwriter wizard says working on it right here. And he's going to tell you exactly what to write in a few minutes. Let me tell you, this sounds like it's a long process, but it is not. I will be done with the whole financial inventory just because I'm doing a presentation. I'll be done with the financial inventory within, 20 minutes.
Right.
So he's asking if it's a test. Anyway, so I'm gonna go and I'll be like, Maria, Jesus, remember when I told you that I was gonna tell you if you need or not need this? And we're gonna do that by finding out what your financials are. So I'm gonna ask you some of these questions. So your monthly mortgage right now is $2,900. Do you pay anything for HOA?
Yes, we pay HOA monthly,
How much?
300.
300. And what about gas for the house?
Wow, I live in Florida, there's no gas. Yeah,
Okay. I'm gonna go through a bunch of numbers just for the sake of time. So
okay,
let's say that you're doing cell phones is $300, electric bill is $500.
yes.
Your car insurance is $600. Your gas
Mhm.
is $120. Your housekeeping is $500. Your no pet care, food and groceries.
2K,
Why is it?
$2,000.
Why is he giving me mood children's whole life?
Because you put year 2022 instead of 2002.
Oh, I did.
You did.
Is what is it? 222, 2022? No, 2002. Anyway, so the wizard's telling me here, okay, and I'm doing the financial inventory. So food, I'm spending $500. The alarm system is $100. Subscription is about $50. Gym membership is like $50. Daycare is $1,000 for the kids. Water is $150. Car payment is 2,000. And okay, I have that. So now I'm gonna be like, okay, Maria, how much are you bringing in a month by yourself after taxes?
After taxes, about 7,500.
$7,500. What about you, Jesus?
5,000.
5,000? No, you need to be making more money than her, remember? So let's say that you're making $9,000 a month.
Okay.
Why? Is it telling you that only client 2 is visible? That's a problem.
They do that every time. I have to copy and paste it back in the chat because they say that every time. For some reason,
Uh,
the
can you text Amanda, please?
Yeah.
Chrissy, and let her know that only client 2 is
yes.
okay. That needs to be fixed, please. Thank you. I appreciate you. Okay. So, okay, so now I know exactly what my income, her income is, his income is, what the household income is. And then I will go ahead and I'll say this. Maria, Jesus, are you guys saving any money per month?
Not at the moment because we're doing renovations in the house. We're buying furniture. So currently we're not saving anything.
Okay, so you're not saving anything, and you have a household. Okay, so let's see here in my system, Maria. I'm gonna click here. It's gonna give me an analysis of your needs. Okay, so
Okay.
let's see what we have here. So if you can see my screen, basically we have a mortgage for $300,000, which you guys already have $30,000 of equity, which is phenomenal if you just bought the house. Based on what we talked about, you guys have about $9,170 of expenses. Now, please do keep in mind that that's just your basic expenses. What that means is that, you know, your clothes, the stuff the entertainment, the restaurants, that going out and doing things with your kids is not including there. That's your basic expenses, what you need to survive. Okay, it costs about $9,170. Now, your monthly payment is $2,900 just for your mortgage, but your life costs about $9,170. You, Maria, is bringing in $7,500, and Jesus is bringing in $9,000, which your total income is about 16.5, right? Now, I did
Right.
ask Maria that, you know, if you guys are putting any money away at this time, and you told me that you're putting nothing away at this time. Your discretionary income, which is that play money, the money that you use to go out to dinner, the money that you use, the money to go on vacation, the money that you use to buy clothes, to buy things for your kids, your actual money that is not your basic necessities is about $7,300 a month. But you did tell me that you're saving zero. Is that correct?
All right.
Which means that your actual expenses in a monthly basis is the $16,500. Does that make sense?
Yeah, that
Right.
does make sense.
Okay. So here's what I want you guys to think about. Okay. And I'm gonna kill you real quick, Jesus. I'm sorry, I'm gonna bring you back to life. But if you're looking at this actual chart over here, your income, Maria, which is $7,500, I'm going to kill that income. I'm not gonna kill you. I will make it where you got sick and you're not able to bring that income in anymore. Okay. Now our income is $9,000, and your absolutely basic expenses is $9,170, and your actual expenses is $16,500. How is that going to turn out for you, Jesus, now that we're looking at these numbers?
I mean, I don't think I'd have enough to really take care of my family for too long, especially pay the mortgage. I think I'll probably end up losing the mortgage.
So Jesus, you did mention to me that Maria would probably, like, you would probably be okay without Maria's income. Do you still think that's the case now that we're looking at everything?
I don't think so. There's many expenses and everything just getting more expensive, and I don't know if without Maria I could do it by myself. What if I lose my job? I don't have no security.
Okay. Now let's just go back to losing Maria here. Let's stay on point. So hold on. So we don't lose. I don't lose you on that. If Maria was no longer here, would you have to have any extra childcare help with the kids, or would you? How would you handle the kids by yourself and working the hours you work?
It's not possible.
Okay. So that means that basic costs, you think it would go up?
Yes.
Okay, so that would be a little bit more expensive even for you to actually handle the kids and do everything, and now you have an income for $9,000. Okay, now based on this, Maria and Jesus, do you guys think that having some type of mortgage protection in place to make sure that you guys would not lose the house would be, on Maria? Do you think that would be like a luxury, or do you think it would be a necessity?
Necessity.
A
Sure.
necessity. Okay.
Yeah.
Okay.
Necessity.
Okay, perfect. Now let's look at the other way around. If we lose that $9,000 of income on you, Jesus, and then Maria, you have $7,500 coming in. Your total expenses are about $9,170, basic expenses, but your actual expenses today are about $16,500 because you're not saving anything. How would that turn out for you, Maria?
That would be, like I said before, devastating because I'm gonna be in a negative.
Oh,
Without his income, I'll be way, way in the negative.
how long do you
So,
think you would be able to hold on to things until you are going to foreclosure on that house? And
Jesus, not even 30 days. Like within the month, like I would need something. Like this protection is absolutely necessary because 30 days after paying all the bills, the mortgage, and to buy food, childcare, I'm not gonna be able to do that. I mean, it's a no-brainer. Looking at it with on paper, because I mean I think about my bills, but when you see the bills on paper, it makes it more real. This brings everything to reality. Yeah, it's a
okay.
no-brainer. I'm gonna need this insurance no matter what.
And so
Definitely.
just to reiterate here, because again, I told you guys if you don't need this, I'm not going to tell you that you need it. You guys think that having something on Jesus would be a luxury or a necessity for you guys?
Definitely.
Necessity.
A necessity. Okay,
Definitely.
so we're on the same page that this is a necessity for you guys. I totally agree. But again, I'm not a salesperson. I'm just
Mhm.
analyzing the situation here. It's a necessity. So if we can find something that fits you guys' budget, which you guys do have a discretionary income that you are utilizing, but you do have some money in there that we could possibly, in this situation, can possibly like put some money away on a policy that builds cash value to help pay your mortgage earlier as well. But if we can find something that's comfortable for you guys' budget that can fit within that discretionary income, do you think that, it makes sense to put something in place today?
Yes,
Yes.
absolutely.
Okay, perfect. So I'm going to close this up over here, and I'm gonna pull some options for us as well. My in-home underwriter is telling me that you guys most likely qualify for UHL for you, Jesus, because you do have, you're very young and you have type 1 diabetes. And for you, Maria, is going to be Kansas City, two different carriers. But let me do this. Give me a second. Let me pull a few options and we're going to look at them together. Okay.
Okay,
Sure.
So here's what I'm going to do now, guys. I'm going to click in here. The wizard told me UHL for him and told me Kansas City for her. What I'm going to do, remember, they're spending all of their money, but they do have some income in there that I could do many different things. In this case, I'm just going to straight up do I think UHL have a cash back option, and I'm going to show them cash back options. It's going to be a higher premium, but remember, they have $7,000 of discretionary income. Okay. And they are just wasting that money in whatever they can afford to buy a a cashback option, put some that money away into a policy, and maybe do it and pay off the mortgage early. In that situation, I'm just going to do a regular cashback right now because their mortgage is 20 years. So I'm going to look at a 20-year cashback. So I'm going to click in here on the term quoting tool, and I'm going to go here for her, and it's 300,000. And I want return of premium, and I want 20 years, remember? So I can do here a cashback. Wait, I can't do that. Sure, used to have one. But anyway, in this case, for the sake of it, I'm just going to do Kansas City for both of them. So I'll go and I put in here 20-year, 100% ROP, full mortgage payoff. I'm going to go to where I was before. And I'm going to put in here, I'm going to create options. So for him, I'm going to click on mortgage. I'm going to do full mortgage. And I'm going to do, no, I'm just going to do ROP. So I'm going to do full mortgage ROP, 20 years. The monthly premium is going to be, no, this is her. The monthly premium is going to be this. And then the face amount is 300,000. Okay, this is for him. I'm going to click to save. And I'm going to click again, mortgage, half ROP, because I want to show them two options. I always want to show them at least two options. And in this case, all of them are going to be ROP. Why? Because they're 22 years old. Why are we showing them any other options? They're 22, right? And they can afford. So in this case, I'm going to go do 150,000 as well for him. And again, this is another rule that every single one of you guys need to understand. Always, it doesn't matter if your top option is $500. Always have an $80 bottom option. And if her option, the bottom option is 60, I will raise it to 80. Always, your bottom option should always be $80 because the most common number people will take for mortgage protection will be $80, and everybody mortgage protection affords an $80 policy. Now, for some reason, they're like, oh, it's too expensive. Then you can go down to something else. But the average you're going to sell is going to be, the bottom is going to be $80. So here you go. I have 20 years. The face amount is going to be 150,000. And then I'm going to click to save. That's for him. And then now I'm going to do hers, which is 4OP. Face amount is 300,000, 20 years, monthly premium here. So it's just female. Let me just, so for her, it's going to be 148. Click to save. And then I'm going to add one more. Her OP. And that's 150,000. So $74 is around $80. So I'm gonna, that's fine. And then there we go. So what I'm gonna do now, I'm gonna click create mortgage presentation. Now you can send this link to your client if you're doing telesales, or you can share your screen, and there you go, you have the presentation. So now I'm going to present to them the options, and then I'll go ahead and I'll address the think about. Very important. Address the think about. Everything I've done so far was to show these people I'm not a salesperson. People do not like salespeople, guys. They don't. People like advisors. You need to establish yourself as the advisor. So I'll go ahead and say, hey, Maria and Jesus, I have some options for you guys. I do need you guys to understand this. It's very, very, very important, okay? Like I said before, I'm not a salesperson. I'm an underwriter. So my job is to find you guys what makes sense for your budget and makes sense for your life. So I pull some options here. If for any reason what I'm showing you guys here does not make any sense, or it's over your budget, or it doesn't give what you're looking for, just tell me. Okay. Some people, they will go ahead and say, hey, I want to think about it. I want to pray about it. And like we talked about it, there's nothing you can think about here because I don't even know if I can get you approved. Okay. But the majority of the times people say that because they don't want to tell me that it's too expensive, or it's not what they're looking for. Just tell me. And I am happy to go back to my quoting tool, pull some options until we find something that makes sense for you. Okay.
Okay.
Another thing that I do that I utilize, if you're talking to somebody that is extremely aggressive or an a-hole, that is a very effective thing that you can say as well. So if I go, hey, Maria and Jesus, I'll be very honest with you guys. Like I said, I'm not a salesperson. I am an underwriter. So people usually use words like, oh, I want to think about it, I want to pray about it, just because they don't want to tell me how they truly feel. And I'll be very honest with you. There's only 3 reasons people will tell me they want to think about it. The first one is because I did a really shitty job explaining how important this is, how important this protection is. And if that's the case, please do let me know. I'm happy to go back and explain all over again. The second one is because they don't care. To them, it doesn't matter, Maria. And then now you're going to reiterate their why. They don't care. You, Jesus, don't care that Maria is going to be not evicted. Is going to lose the house, going to go into foreclosure. You're going to lose all the equity you have in the house. You don't care that your kids are going to have to go live with grandma and they're going to have to change schools. And now, their life completely changed. You don't care, Jesus. If you don't care, you don't care, Maria, that Jesus would probably having to take care of the kids and having to deal with money issues and all of that. You don't care. If that's the case, if you don't care, Maria and Jesus, there is nothing I can do for you. And I'm sorry, you don't care. And the third option, which is usually why people tell me they want to think about it, or they want to pray about it, is because it's unaffordable. The price is too high. And if that's the case, please just let me know. I'm happy to go back to my quoting tool, pull some other options, and then help you guys find something that makes sense for you. Okay. Those are the 2 ways I address the think about it. You can use whatever you like best. And then they usually, okay, great. And then I'll open the screen, I'll share the screen, and I'll explain to them exactly what is on the screen. So I'll go, okay, Maria, Jesus, here's some of the things that I want you to understand about mortgage protection, okay? The first thing is the options we're looking at, they're level. That means the price, the coverage will never go up and it will never go down. It will always stay at that level. So if we're doing a full mortgage payoff, whether you die today or you die in 18 years from now, it will pay $300,000. It will not pay less. Okay, even if you only owe $50,000 in the house, it will pay $300,000. So it's the level benefit. Okay, it is not a decreasing term. There's going to be many different options that we can do for mortgage protection. We are specifically looking at a 20-year term. The reason is because you guys have a mortgage for 20 years. So we're going to be looking at a 20-year term. Some of the options that we're looking at here, they do come with living benefits. What that means is that, Maria, if you're ever diagnosed with a heart attack, a massive stroke, a cancer, a massive cancer, we're talking about critical cancers, okay? Not just a little, melanoma. It does need to be a critical cancer. That policy will come in and you can accelerate a portion of the policy. If you're diagnosed with a chronic illness, which means you lost 2 of your regular daily activities, you can accelerate a portion of the policy. And if you are diagnosed with a terminal illness and the doctor says you're going to die within 12 months, even if you don't die, you can accelerate a big portion of the policy, okay? And the options that we are looking at here right now for you guys does have a savings aspect to it, which is you guys are young, you make good money. And if I can save some money for you, I always want to do that. So it's not going to cost you anything. You're not paying for the policy, you're putting some money away. So we're going to be looking at an option that, God forbid something happens, the house is paid. nothing happens, you get all your money back. So a few different ways we can do mortgage protection. We're going to be looking at two options today. We're going to be looking at a full mortgage payoff. God forbid something happens, it pays off the full mortgage. And we're going to be looking at a half mortgage payoff. God forbid something happens, it will pay off half of your mortgage. I did add a option for an accidental death in there as well. So if it happens in an accident, it will still pay off your full mortgage. Okay. And then let's look at the options that we have here. So Maria, this is for Jesus. Jesus, if we were to cover your entire mortgage, God forbid something happens, it will pay $300,000 your full mortgage in case of death, critical illness, terminal illness, and chronic illness, and it would cost you $166 a month with 24 cents. If nothing happens to you in 20 years, you're gonna get about $39,000 back. Okay. If we were to do a half mortgage payoff, it's all the same. The only difference is that it would pay $150,000. It would be $83 a month and you would get $19,000 back. Now, Jesus, I don't know if I can get you approved, but if I could, which one of these two options would make more sense for you?
We can do that
Is
with
it-
Which one?
No, go ahead.
the on the 66. We can do that.
You're gonna do 166? Okay, awesome. Now let's look for Maria. Maria, if we were to do a full mortgage payoff for you, it would be $148 a month. And again, you would get about $35,000 back at the end of the time if nothing happens to you, because it's saving that money in there for you. And then if we want to do a half mortgage payoff, it would be $150,000 of coverage, and it would be $74 a month. If nothing happens, you get about 17 back. If I could, again, same thing. I don't know for sure, but if I could, which one of the options would make more sense for you?
We'll do the full mortgage.
Full mortgage. Okay, so both of you guys together will be about $300 a month, and at the end, you're gonna get about $75,000 back if nothing happens. Is that $300 a month comfortable for you guys on a monthly basis, where God forbid something happens and your tire blows up, you're still gonna be able to make that monthly payment?
I think that's
Yes.
gonna be comfortable for us because I go to the grocery store 3 times a week and I spend more than 300 each time. So I
Okay.
think if I do grocery shopping twice a week, I can afford this.
Okay, perfect. Okay, I always want to make sure, Maria and Jesus, because again, I want to make sure it's comfortable for your budget, and it's something you're not going to be canceling, next week, right? So okay, perfect. So the next step now, we're going to do that application. It's going to take me about 10-15 minutes to do the application for both of you guys. What I do need to do now, next thing we're going to do is do the application. Do you guys want to go ahead and do the application right now?
Yes, let's do the application.
Okay, perfect. So what I'm gonna need you to do, Maria and Jesus, I need you to send me a text message, the number I sent you earlier. I can send you a text message right now. I need you to send me a picture of your IDs, front and back. I do need to upload that information into the application. And I will need to, once I start the application, when we get to the payment information, I will need your routing and account number. Now, if you're old school, like some of my clients are, and you have a void check, I would love if you can send me a voided check and a picture of it. Not everybody does, but if you do it, that would be wonderful, because some carriers, they do ask me to put it up there. If not, just the routing and account number is fine. You would be surprised, but a lot of my clients, guys, I would say 80% of my clients send me a voided check. Do you know why? Because I didn't sell them anything. I didn't try and convince them that this is important to them. I just asked them questions. And then I'm helping them put something in place that is extremely important to them, right? So at this point, they're like handing me anything I want. And I show to them with this tool, like, guys, I created to literally mimic everything I did in the field with 7 different pieces of paper. So if you utilize the tools that are in there, that makes your life so much easier, you can close at a much higher rate without having to selling anybody anything. Now, I've had a situation where I did do an application with these people here in Florida. It was a Zoom appointment. I wrote 2 applications, husband and wife. the policy was in place for 12 months, and then they went to Aetna, and they said to Aetna that they didn't get anything, and they were being charged for 12 months. That text message with the ID and the voided check was what the only thing I had to send to Aetna to show them that they did want coverage, and that after the voided check, thank you so much for helping us with it. That's a text message between me and the client. So that you having your job as an underwriter, because that's what you are. You are not a salesperson. You are a field underwriter. Your job is to verify that you are getting insurance for the people that you are talking to. So you do need to have their driver's license. It's very important that you are verifying they're them. The second thing is you also have proof that you sat with them and you did help them out, and they did want that. They sent you that information. So I always ask for that. They send me immediately. If you know, you are gonna see me after spring break. You're gonna see me running appointments live, and you're gonna see me that everything that you just saw is what I do. I will go ahead here on the very important. I will get all of the, and what I do when I'm running an application, I will literally open the presentation right here. I will go and I will open whatever, you know, I'll open Real Neighbors. I will fill out all of the information here for the clients first, okay? Like a paper app. I'll get all of the information first. I'll gather everything. I'll fill it all out here. Now save. I'll get the beneficiaries, and then I'll open the actual presentation. I'll just copy and paste, copy and paste, copy and paste. Within 2 minutes, the presentation is all filled because I have it all here. I also have everything saved on my. And when I'm done with all of this information, I'll put the policy number, the carrier, and everything here. And I'll have all of this, and I'll have everything saved. When I save everything, and I don't even know if this is working yet, but you're going to be able to send an email. So let's say that I sat down with Maria and Jesus. I did everything. I put everything here. I submitted the application on the website for the carrier. I'll go in here. I'll put the policy number. I'll put the carrier. I'll put the face amount, the monthly premium. Wonderful. Now I'm going to, before I do this, I'll go ahead and I'll say, Maria, and this is the lockdown, guys. This is very important, especially mortgage protection if you're working leads of people that just closed on their mortgage, okay? Maria and Jesus, congratulations. I just submitted your application. Let me explain to you guys what's going to happen next, right? Like I explained to you in the beginning, I'm submitting your application. It's going to go to the insurance carrier. The insurance carrier, the in-home underwriters will take the file and they will review everything. If they approve your application, you're probably going to get an email letting you know that it was approved. Regardless, I will get an email and I will be sending you an email right now with a copy of your application. I don't know if you guys know this, but it's your job every single time you write an application to provide your client a copy of the application. If you do not provide that application, that copy of the application, you'll lose your license for it. When you do an agent report, you put in there that you actually did provide a copy of your application to your client. So here's the thing. When you submit on here, and I don't know if this feature is up yet, I have to talk to Amanda about it, but when you submit this here, it's going to have a button to send your client a confirmation, okay? You're gonna be able to throw the copy of your application there, and you're gonna be able to send an email confirmation to your client that the policy was submitted. It will automatically send an email saying, hey, Jeff, thank you so much for sitting with me and allowing me to help your family. Here's a copy of your application, and your application is pending. I will be contacting you soon as it's approved. So it's going to be automated. You just have to throw the application in there and send the email. Now, once the application is approved, you go in there, find your case, you're going to click, and you're going to be able to literally send an email and say, hey, your application was approved. And then you don't have to worry about doing all of that. But I will tell them, hey, why do I not see Jesus anymore? He was here, but then he disappeared.
I'm here. I've been here all the time.
But you're not spotlighted. Nobody sees Jesus? People see Jesus? Oh, you were there. Okay. Okay, so I'll go, Maria and Jesus, let me explain to you what's gonna happen, okay? The first thing is, I'm gonna send you an email right now with a copy of your application. And this is huge for persistency. A copy of your application and my information, okay? You're gonna have my phone number, my email, everything in there. Please make sure to save that email, and please make sure to take my number and save on your phone as Vivian, crazy Brazilian insurance lady. Very important. God forbid something happened to you, I'm the first person you call. Okay. The second thing is, because you just closed on your mortgage, your information goes into public records. Now, I'm the underwriter that was assigned to help you out, and we got that taken care of. But unfortunately, because your information becomes public records, you're probably going to get 750 calls. People are going to show up at your house. People are going to tell you that they're my manager and the whole thing. Your mortgage protection is taken care of. If anybody contacts you, anybody calls you, anybody tells you that they need to get with you about mortgage protection, let them know it's being taken care of. If anybody tells you they are my manager, Jesus, do I look like I have a manager?
No.
I have no manager. Not even my husband manages me. Like, that boy over there and that baby over there, they're my only managers. My kids are my managers. That's it. Nobody manages me. So I need you to understand that if anybody contacts you and tell you they're my manager, it's a scam. If anybody contacts you and tell you that I have left the company, that your policy is about to fall off the books, it's a scam. It's a lie. It's just a bunch of salespeople. Remember, I'm not a salesman. Guys, I told them I'm not a salesman. I did not sell them anything. I just helped them with an application. These are salespeople that get your information out of public records, and they're going to try and replace your policy, and it's going to hurt you. Nobody should be touching your policy other than myself. Also, you're going to be receiving a bunch of papers in the mail about mortgage protection, stuff telling you to call numbers. If a paper says, hey, call this number, do not call any numbers. The moment you call, they'll capture your number. They make that into leads. Those leads will be sold for the next 12 years, and you're never going to get enough people calling mortgage protection. Okay. If you get any papers about mortgage protection for you to fill it out, do not fill it out. Throw it out in the garbage. Okay. Do not. And if anybody contacts you about your policy that is not Vivian or my assistant, Daniela Holhas, those are not real people. It is a scam. Contact me immediately so I can make sure that your information is protected. Okay, I'm going to be sending you a text message right now to both of you. Please save my number, Vivian Mortgage Protection Life Insurance Lady. Anything that you need with mortgage protection, with life insurance, with final expense, with retirement, I can help you guys out. And it was an absolutely pleasure meeting you today. And if you need anything, please do let me know. I do
Thank
that.
you.
You
Thank
are
you.
very welcome. And then I do that, and it's very important, guys. This is very important. After you do that, you do need to send them an email with a copy of their application, because people are gonna call and say, "Who's your agent?" They're like, "I don't know. I have their information." Oh yeah, your agent called me to replace that policy. They don't even have your information. They don't even know who you are. You do need to send a copy of the application. Okay, you are a professional. People think that this business is a get rich quick scheme. It's not. You actually have to take care of your clients. You actually have to follow up. You actually have to send them the copy of the application. You actually need to care for these people. So do make sure that you are doing customer service, because your persistency is going to hijack like crazy. I always send a thank you card after my sales. Very important. Rachel sends a $10 digital Starbucks gift card after every sale. Say, hey Maria, it was wonderful helping you guys. Here's a $10 gift card for you to get coffee this morning. People love that, right? And do make sure that you contact them and let them know the policy was approved. I also, when I'm locking down and I say Maria and Jesus, just so you know, sometimes these policies get approved before I get that email, and they will take that first premium out. Make sure to look out for that first premium. If they take out the first premium, that's great news. That means your policy is already approved, it's already issued, and it's in place. Okay. And you're probably going to be getting an email from me a few, hours or a day later, letting you know that it was approved when you see that first premium. One thing that I did not mention, guys, when I am doing the gathering the information to do the application, like I mentioned before, I do not postpone policies ever. In my entire career, I only postponed one policy in my life. If you are postponing policies, it's probably because you're giving people the option. Again, if you're doing final expense, it's different because you're dealing with people on Social Security and you are dealing with things that, they don't have the money right there. But if you're doing mortgage protection, 99.9% of the time, these people have the money to pay for it. So the first thing that you're doing wrong that is getting you to postpone those policies and you're not getting paid is you're going, hey, Maria, Jesus, when do you want to pay for this policy?
Mm-mm.
There's a lot of problems with that. The first thing is they don't know that if they postpone that policy and they don't pay today, something happens to them tomorrow, they have no coverage. So what I do is this, hey, Jesus, Maria, like I said, we're going to be putting the payments right now. Now, they will not charge you right at this moment because, like I said, it's going to have to go to underwriting. But the moment that they approve this policy, they will be charging you the first premium. And we want that, Jesus and Maria. And do you know why? Because if you do an application and you don't have the payments right off when they approve, you do not have immediate coverage. And we want, God forbid something happens to you guys tonight or tomorrow, we want that policy to pay for it. Does that make sense?
Yeah,
Yes.
So
makes
they
sense.
will probably be charging you in the next day or two. Is that going to be a problem?
No.
No.
You guys see how I didn't give them an option? Our placement always, like, before we were a little agency, our placement was always probably 95%. Everything is approved and issued on the spot. I never taught any agents to give options. I never let any agents give options. I would jump on their throats if I saw them on the dial team giving options. So guys, do not give options. If you're doing mortgage protection, you're gonna let them know we're putting this in place. They will be charging you tomorrow, most likely. They will charge you the moment that they approve, and that's good news. Is that a problem? And if there's a problem, otherwise you're gonna adjust. But the majority of the times there is no problem. So that's how I, in hundreds of policies, have never. Actually, I have one time in person, which was a guy that was on Social Security, Social Security, person on Social Security. But other than that, guys, that's basically what I do. That is my mortgage protection system. That is my presentation.